The hardest thing in trading is knowing when to stop chasing. Because right now, the market still looks incredibly strong. But when I zoom out to the weekly chart, the weekly RSI is becoming overextended. The price is becoming stretched above the weekly 21 EMA. And historically, this is where I stop aggressively looking for longs. Now, to be clear, the macro structure is still bullish. The weekly SAR has not flipped. But that doesn't automatically make this a high probability long environment either. To me, this is a transition zone. And that's where the transitional short setup comes in. I'm watching the 4-hour chart for the 21 and 89 EMAs to cross bearish. Because historically, that's often one of the first signs momentum is weakening underneath the surface. If that setup triggers, I'll likely look for a smaller tactical short targeting a quick move down into an oversold 4-hour condition. But until then, I'm staying patient because sometimes the highest probability trade is simply refusing to chase an overextended market. If you want to see the framework I personally use to navigate the market, you can find my market arsenal linked below. Take what helps and go build your own arsenal.